What is going on, my cult family? You guys probably think that's weird if you're new, but welcome. I have a very interesting topic I want to talk about today because I was with my buddy, Coda. If you guys are following my Instagram, you probably saw I was with him, and he asked me a question about the markets, and we talked about what the market's going down. He asked me about the Great Depression. He said, "What caused the Great Depression?" And answering his question, I was unsure giving him an answer. And what I mean by that was that I said it was very political at the time. There was stuff related to like tariffs, and it wasn't called a trade war then. It was just tariffs, and protectionism and unemployment. But I was wondering why it was so, and I told him, I was like, I honestly, because he wanted a quick answer, and I said, I can't give you that. So, it led me, I was like, I said, I'm gonna go look that up a little bit more. And it made me realize, quickly upon researching it, and this is what I want to go over with you guys today, the causes of the Great Depression, because it's still widely debated today, but going through it, there is some similarities, and I want to just discuss it. I think you could take stuff of just understanding, to put this crash in a context. And what I mean by crash, not even that this, it's entering this bear market we've seen recently, because history will repeat itself, but it has its own variations. Yes, we'll look at the Great Depression, but I also want to look at what happened in 1989. You see how we, with the markets then, you saw how we brought up oil. We've been talking about 2001. You've watched The Big Short, 2008, but it's understanding the dynamics of this. And the Great Depression, in the answer of why it was so difficult, and that's why I make the videos, there's 3 or 4 answers to it. People are very split on talk, and there's many economic schools of thought, and that's a cool thing for you guys to understand too, how there's many economic theories of how things should work. There's one theory for all you conspiracists, Marxists, that's what we'll say, they think capitalist systems are designed to fail. So some of you in the comments are probably Marxists, when you're like, it's going to die, so all that stuff. But it's interesting. So I'm going to go over that. If you guys are new, subscribe. We got news, stock market, all that. If you don't know how to trade, go into the description. But yeah, let's get into this. So I have a few articles I'm going to go with you. I'm going to try something a little new. I'm going to read it with you guys and kind of outline it. Also, I have the other video. I'm going to post this here tonight for you guys. We're going to stream tomorrow morning at 6 a.m. But I'm going to go over the CLOs. I have an assignment for you guys. Well, I'm going to go through my process. I've discovered more on it. So if you haven't watched that video, go watch it. And a lot of the stuff we're going to talk here, we've talked about. And there's a lot of similarities right now between the Great Depression though and what's going on, and that's what I'm gonna go over. So said I'm gonna do this different. I'm gonna read. I'm just gonna read to you guys and kind of stop here. You guys have seen me skim before and made it quickly, but this is kind of confusing, but there's only a couple snippets, and that's why I have, if you even Google, that's how I got these. You say what caused the Great Depression, these are like your first 3 links. I love Wikipedia in general, but then you got history.org or history.com in US history. But there's something I'll say. We could start here. While I once built a railroad, blah blah. At the end of the 1920s, the United States boasted the largest economy in the world. With the European destruction brought by World War I, Europeans struggled while Americans flourished. Upon succeeding the presidency, Herbert Hoover predicted that the United States would soon see the day when poverty was eliminated. Then, in a moment of apparent triumph, everything fell apart. The stock market crash of 1929 touched off a chain of events that plunged the United States into its longest deep economic crisis of its history. So we're going to go to the Wikipedia page, but this is important. The first similarity is new president Herbert Hoover. This is the Roaring 20s. You guys have probably covered this in high school at one point. And everything was doing good. New president says, poverty will be eliminated. Kind of, you could equate this to Trump to tweeting how amazing the stock market is. Then out of nowhere, the stock market crashes, and this happened in October, and they said it led off a series of events that caused the economic crisis. Now, this is one view. That's where you're going to see. So, but I'm starting with this one because the thing that doesn't change per view is the time frame. And what I mean by that is it is following an economic boom. There was a large boom, one of the biggest, and there were certain things, politically and stuff happening. That's one aspect of what we saw here. And then the market did crash in October. There's no debating that. But now it's the effects of what happened. So that's where it's interesting where we are today, because we saw the market come down. Is it crashed? I don't know if you could define this as a crash. Correction, yeah, crashes, but who knows? I put it in my videos just because that's what people are searching, and that is, maybe these people are less words to use, I guess. But that's where it starts. So that's the chain of events that goes there, and that's what they said. It's far too simplistic to view the stock market crash as the single cause of the Great Depression. A healthy economy can recover from such a contraction. So they're going to talk about, this is one thing too. The richest 1% of Americans own over a third of all American assets. Such wealth concentrated. You could kind of see that sounds familiar, right? But let's go here. Here's the Wikipedia page that gets a lot done, or that explains a lot. The cause of the Great Depression have been extensively discussed by economists and remain a matter of active debate. They are part of the larger debate about economic crises. The specific economic events that took place during the Great Depression are well established. There was an initial stock market crash that triggered a panic sell-off of assets, so it's what we see today. This was followed by a deflation in assets and commodity prices, dramatic drops in demand and credit, and disruption of trade, ultimately resulting in widespread unemployment and impoverishment. So that's kind of what we're thinking here today of like, and this is where I'm saying, does this panic actually have a tangible effect on, could this panic sell-offs could cost something? And again, you guys are going to see, I made that video where I said, what's worse than people shorting the market is people selling off and not buying because they're scared. And that's what it even says, I believe here in this, that, they purchased, no, where's one of them? But pretty much people were scared to purchase. Then, the richer people, the money didn't trickle down to the economy, because if there's investor confidence is destroyed, people don't want to spend. So again, and then the deflation, I'm going to talk about this, but prices went down. That's what, during this time, this is, there wasn't, the monetary supply was a big issue. I think we're going to get to there. So let me continue. I don't want to get ahead of myself. However, economists and historians have not reached a consensus of the causal relationships between various events and government economic policies in causing or ameliorating the depression. Current mainstream theories may be broadly classified into two main points of view. The first are demand-driven theories from Keynesian and institutional economists who argue that the depression was caused by a widespread loss of confidence that led to underconsumption. The demand-driven theories argue that, well, let's actually start here. This first theory, this is still I guess we'll continue. The demand-driven theories argue that the financial crisis following the 1929 crash led to a sudden and persistent reduction in consumption and investment spending. Once panic and deflation set in, many people believed they could avoid further losses by keeping clear of the markets. Holding money therefore became profitable as prices dropped lower, and a given amount of money bought even more goods, exacerbating the drop in demand. So again, this was a deflationary crisis. Prices went down, and that's something I'm actually worried about. People think we're going to have hyperinflation. I'm actually scared of hyperdeflation. This is what happened, but this is one theory, and this sounds like what we're having here. So if you're viewing this and I'm viewing this of a potential theory could be demand driven, where now stock market, it leads to a sudden panic, right? But now that caused a loss of confidence that led to people not wanting to spend, not wanting to invest. So we might be seeing that on the investment side. But once that panic set in, so we've been doing this for 3 months. If it continues and this panic starts to spread, if people get to this point now where they start holding cash and instead of buying bonds or anything with how high rates are, think about what that could cause now, and then that's deflation. So what's the next one? Second, there are monetarists who believe the Great Depression started as an ordinary recession, but that significant policy mistakes by monetary authorities, especially the Federal Reserve, caused a shrinking of the money supply, which greatly exacerbated the economic situation, causing a recession to descend into the Great Depression. Related to this explanation are those who point to debt deflation, causing those who borrow to owe more in real terms. So again, that would be a deflationary crisis. So again, both of the theories, although they have different views, whether it's demand-driven or policy-driven, that's what the monetarists are saying, that it was significant policy mistakes by monetary authorities. That's President and the Fed Reserve. again, we have the same issue right now where people are calling it the Powell put, and people are, saying that could be a cause, but they're saying that it reduced the money supply, raising rates. They're doing quantitative tightening QT now. They're shrinking the balance sheet. Less money in the supply makes it stronger. People get panicked. They don't spend their money. Again, it goes into deflationary crisis. That's shrinking of the money supply. So then debt deflation. I've talked about this. This is the issue with emerging markets. If our dollar gets too strong, and your currency's weak, or now think about this. If now you owe $350,000 on your home and the dollar goes up a drastic amount, and now your dollar gets you a lot more, you owe a lot more than 300. You could end up owing in real terms 600,000 or 400 or 500,000, but you get the idea. So there are several various heterodox theories that reject the explanations of the Keynesian and monetarists. I don't know if I'm saying that right. Some new classical macroeconomists have argued that various labor market policies imposed at the start caused the length and severity of the Great Depression. The Austrian School of Economics focused on macroeconomic effects of money supply, how central banking decisions could lead to malinvestment. Marxists view the Great Depression, with all other economic crises, as a symptom of the cyclical nature of capitalism and the instability that is inherent in the capitalist model. That's for all you YouTube people out there. So you guys see that there's different models, and they're kind of all related to various things. We're seeing a lot of the same stuff today. And then again, it's what happens from here. So the economy's good, and the economy was good here in 1929, but what happened is that the stock market crashed, and that led to something. And the next thing, another theory, I believe we could go through and explain it. This one has a good one. And employment was the big issue. It was a stock market crash, which led to now either people buying less, people investing less, more unemployment. But we're kind of more solid than that, compared at the times. But it is still, it's interesting. I was gonna say something else with Oh yes, I was gonna say that another theory is that it started as a normal recession, just like even after the cycle, and it was normal for it to become slow, but then there was a slight recovery, but then the Fed kept making policy mistakes, and then the government, and that drew it into a longer one. Because this was the thing that made this a depression versus a recession was that production was going down, unemployment was going high, people were, prices were going down, and it was affecting a lot of different things, but it was prolonged. This was 10 years, and that's what people are saying. People are talking the Great Depression of 2018, 2000 or 2019 to 21, but we'll see. But I think I'll leave it there. I'll keep it kind of simple for you guys so you could get kind of an idea. Look at these pages. I didn't get to go over this one. This one's a little longer. And again, the causes, they say things, but it all starts with the market crash, then production. Maybe this we could finish here. Now I'll let you guys read this. You guys could get the links, like I said, but let me know what you guys think. Do you think this is going to be a recession, a depression? Do you think it's crazy to talk like this? Where are you guys at, and what other similarities or differences, and what do you guys think? And have you guys looked at my videos on 2001? Because I'm still thinking 2001 makes the most sense, but we're seeing so many unique factors. I truly think 2019, 2020 is going to just be its unique thing. And who knows, history repeats itself. Happened same time in October. 1929 sounds a lot like October 19. Yeah, I don't know. Maybe it's just a weird time. Fibonacci's, whatever, technical. Who knows? I don't know. I love you guys. Subscribe. Give me some feedback. Stay in school. See you tomorrow morning.